thank you all for still being here. I know it's late in the day, but I hope we can wake some of you up, maybe have some interesting things to talk about. So joining me today, my wonderful panelists, going from left to right, we have Achim Karle here from Eurex. So he's got 13 straight years at Eurex under his belt, I believe. So really knows what he's talking about from that sense. Then Marc Faubeau flew in from London from Jacobi Asset Management. He's made in his career pretty much the whole journey from the back office all the way to his role now in business development, with some stops at trading venues as well, like market access, and now he's at Jacobi as business development manager. Jacobi has a Bitcoin ETF, so they have a product there. Eurex, of course, has derivatives. Then sitting next to him is Sven Hildebrandt, who most people in Germany probably already know from his from his activities in the German crypto scene. So he's here as the executive director of business development at Boerse Stuttgart Digital. Certainly also a pioneer in offering crypto assets to everybody in Germany. And then Oliver Schäfer is my furthest from the left here, managing director and head of Germany at 21 Shares. And before that has been able to gather some experience at JP Morgan Asset Management, I believe, but now at 21 Shares. So took the leap to full-time crypto in 2022, I think. So interesting time to take the leap, but I'm sure you enjoyed. And then, so Amy is not here yet. Amy climbed the ladder at Morgan Stanley, I think, has a very long career there, started as a portfolio manager, and will be joining us now as managing director and head of emerging markets equities. Whenever we get to see your picture, maybe someone will let me know so I don't have to look up the whole time. So we're talking about the spot Bitcoin ETF in the US and what that means for European markets. And I think the first thing we need to understand is what that product is and what the difference is with the products we have here in Europe and in Germany, right? So I think that's the first thing I want to make clear, and I'll give it to the panels. Whoever wants to can take the mic and explain what the hell is the difference between the ETF or an ETF and the kind of ETCs or ETNs that we can all buy here in Europe at the moment?
Yeah, if you allow, then I would take over this question. And obviously it's very easy. In Europe, or especially in Germany, we already have ETPs, or as you said, ETCs or ETNs or ETFs. So we as a Swiss company, for us, it's very easy. We just have ETPs, that means exchange traded products, which summarize everything. Exchange traded product, very simple. Then in Germany, you have the differentiation between ETFs, ETNs and ETCs. And I would say, speaking for our products and for crypto, we would say we are very close, or we would define ourselves as a ETC, very similar to the gold ETF, Xetra Gold or something like that. And then there's a new difference in the US. Now we have to spot US ETFs. And the difference is in Germany or in Europe, under the UCITS regulation, you are not allowed to have a ETF with just one single investment. That means, as it is a fund, a ETF, a fund needs to have a diversification, and therefore it's not possible to have an ETF in Germany or in Europe with just one single underlying, and that's the main difference.
Yeah, I'll build up on that. So we have an ETF at Jacobi Asset Management, which is technically an ETP, right? P stands for products. So under ETP, you've got ETF, ETN, and ETCs. ETN and ETCs are unregulated senior debt products. So they're like a bond. They're structured products when ETF or funds. So the ETF is a more like a simpler, more vanilla product. We receive the orders, so the authorized participants receive the order from the exchange. They get dollars coming in. They take the money, go straight on the market, buy Bitcoin, send that in custody, and that's it. So there's no swaps, there's no futures, there's no complex structure. It's very, very vanilla. So that would be maybe the one of the difference with a bit more complex structures like ETNs or ETCs, which when they are backing themselves, not all of them are backed, physically speaking. Some of them if they are backed, we go through a trust, and this trust then has Bitcoin as collateral. The ETF, the funds, the Bitcoin we have, are owned by the fund. So whenever investors buy a share of the ETF, they buy a share of the fund itself, and they own part of the Bitcoin. And Bitcoin is not collateral in this instance. So that would be just a few more details.
Very good. I think it's very important to know the differentiation, but at the end of the day, if you're the customer buying it, the experience is very similar, buying an ETF to buying an exchange-traded commodity note, like we have it, for example, from 21 shares, right? And you also explained why we don't have the same kind of ETF in Europe. There are these diversification rules that a spot Bitcoin ETF doesn't fulfill in the UCITS regime. So now that that's out the way, sorry for you guys, you're not going to be able to buy a Bitcoin spot ETF in Europe. I think most of you already knew that, though. But nonetheless, I think there was a significant impact in Europe, and I'd like to give that question to you to tell me a little bit maybe what you felt, on the one hand, from a cultural side. So was there a cultural impact? Did you feel something in the people around you, or just in your bubble, obviously, but in Germany in general? And maybe was there a political impact too, that something happened with regulators in Europe, that they switched their chains of thought here?
Yeah, maybe I'll take this on because I'm usually a person who feels much. So yes, there was a heavy impact from the Bitcoin ETF approvals in the US and on the whole market. As you pointed out, I've been here for quite some time. That also explains my haircut. So I'm in crypto for a little while, and I've been talking to institutes. I mean, I left a asset manager because I had the feeling that they are not going as fast into crypto and into blockchain technology as I thought that it would be making sense. So that was the reason why I actually quit my job back in 2019. And now here we are in 2024. Finally, you have the Bitcoin ETF arriving. And I was like, thank God. You know, it just feels like you're rolling up like a Sisyphus game. You're rolling it up and rolling it up. And also for working for Boerse Stuttgart, it took a long time for the traditional, or at least it felt to me. There's some players who would say it differently, but it took a long time for the big players to actually enter the market. We've been talking about that since 10 years. Yeah, now the institutions are coming. But I see that with my own eyes that the institutions are coming now. And what I believe is especially interesting in this whole thing, and this also touches me personally very much, is that when you're looking at the development that we have seen so far and all the news that have been made so far, the money has not arrived yet. So we have we have made the announcements. The announcements have been there. So the big banks, they have announced what they will be doing in the future, and they said, yes, we are going to allow our customers to buy and sell Bitcoin, for example. But they just said it, and it's not implemented yet. So this will all be coming, and so this is all the money that will actually come into the market, but it's not there yet. And so it's the same with institutional products. And then I shut up. And so it's the same thing with like institutional side of things. For an institutional investor to move, they're even slower than the usual retail investor. And a product needs to have a certain track record. It has to be there for like 6 months, or it has to be 100 million on assets under management before they can even invest in. And now it's just a building up time. And once we hit that road, it's going to be crazy. And I'm really looking forward to that. And all of you should be looking forward to that too.
And I think it's called the chicken and egg problem, right?
Yeah.
Everybody's waiting for it, everybody likes it, but at the end they're sitting on a sideline and waiting for, is it now or is it later? But at the end, okay, we need a decent amount of money we need a decent investment like Universum. We need a decent like asset under management seen there somewhere, and that's kind of the barrier we have to break. And I think then it's as you mentioned. I mean, that's also why we launch our futures and options on these products. As we know, in a modern portfolio theory, you need to have those possibilities with the diversification and also with those derivatives to add on to such ETFs or spots, whatever you have there as a portfolio.
Yeah. I can draw a parallel with my experience at Market Access, which was I worked there for 7 years, and I was going to the sales and traders in Switzerland mainly, and telling them, hey, this like black and orange screen you've been trading on, for many years, your bonds. Well, you have to trade now electronically using algorithms. And they were like, I look young, and they were like, who the hell are you? And then fast forward a few years, like OTC products, like bonds, are now traded electronically and using algorithms. So when now I go to see my former clients, so most of them head of trading of all the most well-known private banks and asset management companies, they're like, they don't know what's happening technically. A lot of them, when I ask them questions about Bitcoin, like Bitcoin 101 questions, it's very hard for them to really grasp the idea and the opportunity. So it's about, for them, right now, gathering the information, and the fact that the ETFs were approved in the US, it's kind of like a small wake-up call for them to start doing a bit more research about the product. So hopefully towards, I don't know, the end of the year, beginning of 2025, we should see a bit more movements and hopefully allocations coming from the institutions. But it's hard to see that coming, before that, I think.
And if you may allow another sentence on this, I fully agree with all what you said, but what exactly is the message for me or for us behind the SEC approval? It's not only that now Bitcoin has arrived on the largest stock market in the world, the US. The message for the rest of the world is also now it's an asset class, now it's there, now you cannot skip it and not take your time to invest or even to get information on Bitcoin. Now it's an asset class, now it's on Wall Street, now it's there, and now take your time and get information about it.
Oh, very good point. So I can see Amy nodding. I don't know if you can see her. Yeah, there she is. Can you hear us?
Hi, how are you? Sorry I was late for the panel.
No worries, that's all right. So we've introduced everybody. I introduced you as well, but now people have a face to the name. And we were just talking about, the difference between ETFs and the products we have here. So exchange traded notes and commodities, and about the impact we felt from the ETF in Europe, even though as a retail investor you can't buy the Bitcoin spot ETF in Europe, there was still quite a strong impact we saw here. It was made headline news everywhere in Germany and in Europe. And yeah, I mean, now that you're here, I'd love to get your take on it as well. I know you're in New York right now, so you felt the impact at its source, so to say. So maybe you can give us a little bit of an, yeah.
Sure, and I would say maybe just start out by saying, because I had our global emerging markets business, having different vehicles to access products that are difficult to access is not something new for us. That's why it makes it so easy to move into the digital asset space. There's a lot of parallels there. And while I do think there are some highlights, like obviously having spot ETF products now was definitely a big shift, I think for institutional investors, the one thing that we've always dealt with is with different jurisdictions, we're going to use whatever is available and whatever is best for the portfolios that we need to provide access to. So if that's an ETF that's available, many times it's only an ETN that's available. And then you'll go through all of the different factors. So liquidity, fees, due diligence, governance of the underlying issuer of that product. So I do think it's multi-factored. I think that at this point, while it has been a highlight that, of course, I'm at the source is a big deal here, I will say that it's been a little more quiet. So that's one point to just finish on. The one thing we've been talking about internally compared to some of the other cycles, we haven't gotten client calls in the same way in other cycles we've gotten calls about access to Bitcoin. And that's been a little bit surprising to us, given how much we've seen just in terms of activity in these ETFs since January 11.
That's quite interesting, yeah, especially that last point. And so now that you said that, I'd love to hear if you guys saw any impact on your flows. So when the ETFs were approved, let's say from institutional investors in Europe that can also access these products, did you guys have outflows, maybe inflows, just because it was such positive news? I mean, I don't know, Oliver, maybe it's a question to you, but maybe for you at Eurex also, maybe did you see an impact in your volumes?
Yeah, sure, we saw an impact because we also have a US ETF approved from the SEC, so it was very good for us not only to have a product, but also to be named beside names like BlackRock, Fidelity, and then 21 Shares, which is a great pleasure for us. And the impact, I would say, for Germany or for Europe is that many people coming actively to us asking, now there's a spot ETF available in the US, when will this be possible here? And then we could only answer, great that you ask us, because we already have this since 5 years. It's here called ETPs, but you can invest already in Germany and in Europe since more than 5 years in ETPs.
Sven is smiling a lot, but you can go ahead first.
Yeah, so that's actually correct. I mean, the first product we launched on the Bitcoin was actually on an ETN. It was a physical backup. And we saw that this was actually not working. So we had this ETN launched at Xetra. It was the most traded ETN at Xetra, the platform at all. We thought this was a smart move for us at Eurex to deliver a future on this one, because then all the guys active there can take the Eurex futures as a hedge and so on. It didn't happen. It didn't materialize. So then we thought, okay, what went wrong? What was not good? And actually, it was, to be honest, it was the problem that the thing was physical, delivered by the ETN at the end, if you would run into the settlement. So then we decided, okay, we have to change that. And that's why we, a year ago, on the 17th of April, actually a year ago, we launched our future on, instead of an ETN, on an index, which is from FTSE calculated, so a benchmark delivers the FTSE benchmark Bitcoin index, which is then our future and also the option based on. And now with this one, so since last year, we had around 90,000 lot traded on our exchange, around 3 billion euro notionals. We see an average daily volume of 400 to 500 lots, which is okay-ish. But what we achieved is actually that we have, and this is also after the launch, we saw that our market makers got again more interested. So we saw, of course, with the crypto winter, that the demand on the product and the interest of the product went down. So this was really like sad. We, of course, have our market maker active, but we couldn't attract them to be that active as we like. With the spot, with the new ETF launched of BlackRock, we saw that the market maker also got more attracted again, and we now see our spread prices narrowed down to $15 to $45, which is very, very good. And of course, the market is there. On screen, you can trade this product, so the cash-settled product, so not on the ETN anymore. But this is in addition to what else is needed for the financial industry and for asset managers who then dive into and having long position and use our products for hedging and risk management.
Risk management is a very interesting topic. So when you're talking about physical Bitcoin, I think it's always funny when you're talking about physical Bitcoin. But let's put it that way. So you've got physical Bitcoin. This is the private key that you have in your hand or somewhere else, and then you have an ETF structure where actually the physical Bitcoin is somewhere in that ETF structure. And if something goes bust, you actually own a piece of the Bitcoin. And then you have the ETN, where if something goes bust, things get a little bit more complex, just to put it in those three brackets. So I think the interesting stuff when you're actually looking at Europe and at regulation, and as everybody in this room knows, I'm a big fan of proper regulation, then you will encounter some interesting things actually. So you will be encountering, for example, that in Germany, Germany made a pretty cool law. So thank you, Tim Kreutzmann, if you are here, for the special fund. So you are, as an institutional investor, allowed to allocate a certain amount of crypto assets directly into your crypto portfolio, if you are an institutional investor. If you are a UCITS fund, which a normal person can buy, so not an institutional investor, but you and me, this is not allowed. But you can build a UCITS fund, taking a wrapper structure, just like the ETPs, and stuff them into the UCIT. And I never really quite understood it, because this, to me, this still does not make too much sense from a risk management perspective. So when we're sitting now here with, Eurex and all the people who are building, these wrappers, and also having you here, can somebody, and having you here, Amy, sorry, I didn't want to leave you out of this role. Can somebody explain that to me, please?
Yeah, we've got a unique position right now, and which feels, it's a blessing and a curse at the same time. So again, we're the first Bitcoin spot ETF regulated in Europe, right? We're not an ETN again, and ETNs, the prospectus is regulated. ETF, the whole structure is regulated. So in order to be able to issue the product and get it listed, we have a regulated asset manager that has to be approved by the regulators in order to, again, be able to list it. The issue with that, obviously, is that regulators ask us to only sell to qualified investors. And when you know that the current inflows in the US for all the 11 issuers is 90% plus retail coming from the US, obviously, it's a bit tricky as an ETF to be able to sell to retail investors if you're not allowed to, obviously. So it is good to see again the US and all the inflows, as Oliver rightly mentioned. It's a statement in the market, and this is very important for the legitimization of the asset class, getting more eyes, getting fresh blood and new talent coming in the industry, because this is what we need. But at the same time, we need the regulators to step up also, the FCA in the UK, to follow the steps of the SEC. We heard this week the SFC in Hong Kong also approving Bitcoin spot ETFs and Ethereum. This is great. It is going in the right direction. But speaking about what I know the best, being living in London, the FCA right now wants to be, the UK wants to be a crypto hub, but they're falling behind, right? So the FCA has to take this responsibility. The issue right now is that you're pushing, as a regulator, your role is to protect the end investors, the retail investors, the mom and dad who are FOMOing and investing in Bitcoin, not knowing what they do. So the two options that there are right now is whether go and buy Bitcoin directly, which is fine when you know what you're doing. But 99% of the people, while we are talking about Bitcoin, they don't even think about Bitcoin. They've got no idea what blockchain is, right? So them going there when they see all the news hitting the media is risky. Second option is going through ETPs, or what we like to be a bit more specific, ETNs or ETCs. And they are good products. They have shown that they were resilient, and in time of liquidity stress, they've been well structured. But yeah.
Are you referring to the Terra Luna ETP there?
No, I spoke to a more general ETPs.
All right, Oliver, you caught a little bit of slack about your ETPs now. You feel free to rebut if you want.
Yeah, maybe if you allow to add something to your question. This is a very good question, but not for us, more for the regulator, because we are asking the same things. And to make it a little bit more difficult, if you are a fund manager and you are domiciled in Germany with a DE ISIN number, you are already allowed to invest in crypto. And if you are domiciled in Luxembourg with a LU ISIN number, you are not allowed. So it's a good question, I would say, for the regulator. And one more important thing to add, if you are a private investor, then you have the option. You can choose, will I open up a wallet? Will I be the owner of my private key, etc.? If you are an institutional manager, for example, a fund of fund manager, it's not really good or possible for you to open up a wallet, give the money to somewhere in the internet to have a private PIN. For them, they have to invest in products.
So good thing we don't have a custody firm sitting with us right now. But I think it's a really good segue to maybe the last question, because I think there might be some discussion about it too. And Amy, I'd like to start with you. With these ETFs being approved and these other, all kinds of products that make it, in a first step, I would say, easier for any kind of investor to enter this market, are we moving towards a future where nobody really uses self-custody of Bitcoin anymore. Will self-custody remain? And is it a good thing or is it a bad thing? Like what's going to happen there? And Amy, feel free to give your take.
I mean, given my background in 18 of the top 10, or sorry, 18 of the top 20 markets are EM markets, I can tell you they're not buying ETFs to get access to Bitcoin. They are buying direct. I'm also personally a big believer of buying direct. I've come around to the idea that ETFs help bring the understanding and awareness and ease for certain use cases into, say, asset allocation models, or we talked about managing risk. I do think there's capabilities there, but I think that, and one thing we haven't touched on too much is just the infrastructure. So these ETFs came to market. We're still dealing with a very few custodians, fund admin, basically all of the infrastructure operators are pretty limited. And even for large banks, at least in the US, that are also overseen by the Fed, we have requirements, even though the SEC has approved these, that we're also dealing with other regulatory requirements that are giving us limitations in what we can and can't do. So I don't think I do think there's a future where we do hold this, and I think there's benefits to it. But I think, and I'm also, I would say, generally speaking, the future is not wrapping new technology in old technology. I think somehow we need to get to a world where it's all new technology. And I do think that'll come in the future with tokenization of everything at some point.
I think you just made yourself a lot of fans in the room here. What do you guys
some enemies
think?
as well.
And some enemies.
I think, trying to be as objective as possible here, I think it's going to be very hybrid. Like, I invest myself in cryptocurrency. I do encourage people who understand cryptocurrency to directly invest in Bitcoin. Like, do not go through an ETF if you know what a seed phrase is, a digital wallet, etc. There's no point, right? However, taking the example of my sister, for example, who finally invested in Bitcoin after me telling her for years to invest. And as soon as she got the Bitcoin on the centralized exchange, she was like, what do I do with it? I was like, well, you put it on Ledger now. She was like, what is a ledger? Okay. And then I explained what a ledger was, and she was like, what do I do with a ledger? I was like, well, you put it somewhere safe. And she panicked, right? So a lot of people are not ready to do self-custody, especially retail investors, and they do not want to have self-custody. They'd rather blame a professional institution and say, "Hey, you lost my money," than saying, "I'm the one who lost it or got it stolen." Right? So it's going to be hybrid, and it's very important that we've got this phase where people who are FOMOing, who want to have exposure on Bitcoin, come in through ETF, ETP, ETNs, whatever the product that suits them. Come to the market, start understanding maybe Bitcoin, Ethereum, any type of assets. And this is how we're going to get more talent and we're going to grow. Because I'm sure that 90% plus of you listening to this panel today, you didn't come to cryptocurrency and digital asset knowing about tokenization. The first thing you heard was Bitcoin. And then from Bitcoin, you heard about blockchain. And then from blockchain, you went into this rabbit hole, right? So we need this hybrid phase. It's really important. And I don't think there's going to be necessarily full non-custody or full self-custody. It's going to be, case by case.
And I would also like to add, it should not be an either I have a own wallet or I have a ETP. From my point of view, it could be both. If you are a private investor and you said, I want to follow the original idea of Bitcoin and I want to have my money or my Bitcoins, my coins outside of the existing financial system, then feel free to buy Bitcoin. If you want to use your Bitcoin for payments, feel free to have your own wallet and use Bitcoin. But if you are an institutional investor or a private investor who said, I'm not into this, I don't want to send money somewhere to the internet, I don't want to look after my private PIN, which should never get lost, etc. The easiest way for institutional investors, but also for private investors, is to have a ETP, from my point of view, of course, but also feel free if you are able and you are willing to have your own wallet, please use it. As long as you are interested in crypto and Bitcoin, this is fully fine for us of all, I would say.
I'm with Marc. on this take. But I would like to invite you to take an experiment. Something that I've not understood yet is why the Apples and the Samsungs of this world, because who in this room does not own a smartphone? Alrighty. So imagine a world where you buy your smartphone, and while buying your smartphone, you're doing the complete bank grade KYC when you're buying the smartphone. And you have a secure chip that is built in the system just like Ledger. Ledger uses a secure chip just like the same as it uses in credit cards. And it's already in the Samsung S20, by the way. So you have the secure chip sitting in there, and when setting up your phone, it's just coming like mandatory, right? You get like a mandatory blockchain address that you can say, okay, I want to get that, and get all these extra features. Maybe you can buy an insurance or something like that. If Apple would really look at it, and I'm sure they are looking at it, but if they would really push it, they could become, and Samsung could become the largest possible custodians of assets within a year, like worldwide.
Not sure we want that.
That was nothing that was combined in my question. But if they are just equipping their phones with the technology, they are actually not acting as the custodian anymore because you're your own custodian, if that's the case. So I think that this is a very interesting thought experiment. And I have not really understood yet why they haven't done it so far.
I think it's quite interesting, and like you said, it would make it a lot easier. And maybe that's a big takeaway here on why the ETFs and these kind of, in general, exchange-traded products are so important, is simplicity for the end user. At the end of the day, the average person is quite risk-averse, even when they're investing in crypto assets, right? And the average person is also fairly lazy and doesn't like learning new things, especially when it means you can make a big mistake and lose your money, which is why most people will shy away for a long time before learning how to use a ledger, how to do custody, and anything that can make that easier, that first step easier, I think we should welcome, whether that's an ETF or Apple building a chip into their phone, or the Solana phone, which already exists, for example.
Well, but Solana usually stops quite often. So.
All right, I think I really enjoyed the panel. I think there were some good points. If anybody would like to take the last word, you're invited to do so. If not,
if somebody is in this room who has not a fraction of a Bitcoin and wants a fraction of a Bitcoin, find me. I'm standing outside of the room and I'm giving fractions of Bitcoins away for free and show you how the Lightning Network works.
That's an amazing offer. Thank you so much. Thank you, Amy, for taking the time to dial in. Wishing you all the best, and thank you for your attention. Wonderful.